Today you will learn a very effective 5-minute scalping strategy for trading crypto that is making a lot of money. This is a very smart indicator-based strategy that follows the trend and finds high probability trade entries. I will also show you the backtesting results behind the strategy at the end of this video, so stay tuned for that. The backtesting app I'm using is called Trader Edge and it's officially the best one out there. Thousands of traders around the world are using Trader Edge to get an edge in their competition. Trader Edge is way faster than a traditional backtesting method. All you need to do really is to set your initial account size and the profit and loss per trade. Trader Edge will give you all the info you need about the strategy, such as the win ratio, the profit and loss, the maximal drawdown, and much more. By the way, the backtester is not the only feature they got on the website. They also got some other useful things like a position size calculator, which can be really handy for those who trade forex and commodities, the profit and loss calendar where you can track your trading performance and make some important notes, and the indicators and strategies menu. Here you can download some super accurate indicators for MT4 and TradingView platforms, and they've all been proven to work. If you're not entirely sure how to backtest, no worries, you will get a full step-by-step backtesting plan which has $100 value. If you're not sure how to build a profitable trading strategy, no problem. You will also get a full course on how to build a profitable mechanical trading strategy which has $270 value. And if you sign up right now, they'll also include 4 high-quality strategies that have $100 value. So that's around $500 worth of bonuses, all for free, but only if you sign up right now. Trader Edge has a 7-day free trial, so there is literally no risk at all. So go ahead and check it out. I will leave a link in the description below. Okay, so for this strategy, what you want to do first is to open the tradingview.com and set the time frame to 5 minutes. The next step will be to click on the Indicators tab and search for the first indicator, which is called SSL channel. Then you need to select this indicator right here. Now let's double click on it and change its parameters. So in the input section, you want to change the periods from 10 to 15. As we can see, this is a very easy to read indicator. When the green line crosses above the red line, this is a signal to take a long position, and exactly opposite is true for short positions. However, we're not going to be using this indicator in a standard way. I found a better way of using this tool that makes the signals much more accurate. But before we get into that, let's finish building our setup. So for the next indicator, let's add a range detector. It's going to be this one by Frontiera Misu. And we're going to need to make some adjustments to this tool as well. So in the star section, let's untick the upper and lower bands, the labels and the lines. This indicator will help us spot the range in market so that we're not taking the trades during this time. So when the price action is ranging, the bars get colored in orange. This indicator also identifies the trend direction. Notice when the selling pressure is high, the bars are red color, and when there is a strong buying pressure, the bars become green color. Okay, to complete the setup, let's add one more indicator to the chart. We're going to be searching for a volume oscillator. Now let's make some slight changes in the star section. This indicator will help us identify the high level of volume in the market. Okay, the strategy is now ready, let's understand the trading rules. So, a signal to go long is valid only when the following conditions are met. First, the market must be in an uptrend. This is confirmed by the green color of the bars. Second, the green line on the SSL channel must cross above the red line. And most importantly, the current cross must not be positioned below the previous cross. It must either be on the same level or above it. And for the final condition, the volume oscillator must be greater than 0%. Once we have these conditions met, we can go ahead and place a buy order. The stop loss can be set either at the SSL red line or at the recent swing low. The take profit target will be set at 1.5 times the risk. Here's an example where a signal to go long was not valid. Although we have the majority of conditions met, such as green candles, the bullish cross on the SSL channel and the volume, we still cannot take a long trade because the current cross on the SSL channel is being below the previous cross. This usually indicates that the bullish momentum is lost and the market is potentially changing its trend direction. The second long signal was not confirmed either. We see the current bullish cross is positioned below the previous bearish cross. But if you decide to take the trade anyway, you are risking to get stopped out. so it's very important to follow the rules and take high probability trades only. In this example, we have all the conditions for entering a long trade met. Okay, now let's learn the sell positions. So first, the market must be in a downtrend. This is confirmed by the red color of the bars. Second, the red line on the SSL channel must cross above the green line. Also, the current bearish cross must not be positioned above the previous bullish cross. It can either be on the same level or slightly below it. And just like with the long trades, the volume oscillator must be greater than 0%. If these conditions are met, we can confidently go ahead and place a sell order. The stop loss can be set either at the red line or at the recent swing high. The take profit target will stay the same. Let's take a look at one more sell example. So first we see the candlesticks are red color. We have a bearish cross on the SSL channel. We see that it's on the same level with the previous bullish cross. The volume in the market is also increased, which is a really good sign. Okay, now you've learned the strategy, let's proceed to the backtesting to find the real metrics behind it. So after taking 100 trades with the strategy, the win rate turned out to be 75%. The profit and loss is also pretty high, but bear in mind the spreads and fees are not taken into account. The profit factor is 4.5 and we had 13 consecutive wins against 2 consecutive losses. The maximal drawdown does not exceed 4%. So overall really good strategy, definitely give it a try, but keep in mind that all the backtests are unique. You should forward test the strategy with the paper money first before trading live. If you have any suggestions on how to optimize the strategy, please let us know in the comments. By the way, if you want to learn my best strategies for trading crypto, stocks and forex, check out this video right here.